Hey folks, Dan Frio here with your market report for February 9th, 2024. So in today's video, we're going to talk about is the CPI. The CPI is the inflation number that you and I pay, okay? Why it's important and why we're focusing in on it today. What's one of the biggest key points that the Federal Reserve is monitoring when it comes to inflation numbers, but there was a revision that just came out that I want you guys to be familiar with. So that's what we're going to talk about today. Then based on this data, is the Federal Reserve going to pivot maybe at the next meeting later on this year? We're going to talk about that as well. But I'm starting a new thing on Friday mornings. If you guys want to buy me a coffee to help me wake up to do these videos on a daily basis, they're going to be down in the description below. There's going to be a buy Dan a coffee and just help out the channel. It helps me out and it also helps me wake up on Friday mornings. So without further ado, let's get over to it. So right here, what you're seeing on the board is these are the top 6 products people use when they're buying their first house. Okay, these are not my rates. These are actually what they do is Mortgage News Daily over there. They survey lenders all over the country and they ask them these 5 questions. Those 5 questions are this. If you had a borrower trying to buy their first house, it was a single family home and they were going to live there. It was going to be their primary home. You might be saying, Dan, that's me. So that's my rates. Well, no, there's more to this equation. The more is these people have a 780 credit score and they're putting down 25%. Now you don't need to do that. Probably not any one of our borrowers is doing that. So what can you do? How can you qualify for a house in today's market? How much money do you need? What credit scores do you need? I'm going to give you all my information at the end of this video so you can reach out to me after you buy me a coffee and we can explain to you and walk you through this whole process. So without further ado, let's get over to it. You can see basically mortgage rates are just stabilized right now. What actually happened? Well, the inflation numbers in December were even better than expected from when the Federal Reserve or the government actually reported them at the first time. So let's dig into these numbers. It's the only really numbers out today when it comes to the economic calendar. Here's my calendar. This is the website that I use all day long. What you can see up there is the CPI. Now the CPI number is consumer inflation, okay? The number I want you guys to focus in on is the second number down below, okay? The month over month headline readings previously was 0.1. Okay, and then it moved to 0.2. So they're saying, well, see, it's still going up. Well, it was revised. It might not be much, but it was revised from 0.1 to 0.2. So now it's saying, well, the number was 0.2 month over month previously. Well, now it's the new readings are 0.2. So this means basically inflation is completely stagnant at this point. I also posted a video yesterday of Kashkarian. He sits on the Federal Reserve Board. He actually came out and said, if you look at the last 3 months, maybe even 6 months, the inflation numbers are 2%, right at what the Federal Reserve's target rate. I'm going to put that video right up there through there so you can check that out. So that's basically the headline numbers that we have today. Let's go over to the markets, the overall markets, and see how they're being affected by this. Well, the Dow Jones is coming down a little bit, but the S&P just hit a record high over $5,000 for the first time. You can see that right through here. The NASDAQ keeps rallying on AI chips and so forth. So that's really what's going on with the market. Why this is concerning as well, I think this market is getting way overheated. It's kind of like the housing market back in 2020, 2021. Everybody had to get in. Well, right now, that's what's happening in the stock market. I'm thinking it's a little bit overpriced, but how this is also affecting the overall economy is a lot of people continue to watch their stock portfolio, their retirement plans, and they're like, wow, I'm up pretty big. You know, last year, the S&P 500 right over here, it's the broad index of the whole market. It was up over 25%, 25%. That's crazy. It can't be sustained. So my thinking is, I know we're not a stock channel, but my thinking is we might see a little bit of pullback in some of these areas, but we're not a stock channel. We actually focus in on real estate. So let's get over to that. Where concern is right now is what the heck is the Federal Reserve going to do at the next meeting or the next meetings in 2024? To do that, we go over to the CME FedWatch tool. Did you guys know that? Did you know the CME actually had this thing? Well, it's saying in 40 days from now, what's the Federal Reserve going to do? Are they going to raise rates? Are they going to drop rates? Well, if you go down through here, I got to put this in the context before I bring up the screen. The current federal funds rate, it runs in a range. So right now it's 5.25 to 5.5. So let me get my head out of the way and let's see where it is. So right now, the probability at the next meeting that you're seeing that's coming up is 82.5% that they're going to do what? They're going to do nothing because they're going to actually keep rates right in this range here. But this did tick up a little bit. This number the other day was 78, I want to say. But this number also ticked up as well because this has to equal 100. So this ticked up to almost 20% chance that they're going to cut rates. I don't think that they're going to cut rates. I'm almost pretty sure about that. But I think they're they're going to start cutting in May for sure. Here's the probability chart that they come up with. So basically on this, what happens is 4 times a year, all the Federal Reserve members get together and they put basically a dot or where they expect mortgage rates to be. I'm sorry about that. Not mortgage rates, interest rates, the federal funds rate. You can see through here, there's basically at the March meeting, there is an 82% chance they're going to do what? Nothing. And then it starts to really change. In May, there's over a 50% chance that they're going to start cutting. This is the pivot point. So they're going to cut, my expectations are they're going to cut 3 times, which we should be about in this range here, the 4.25 to 4.5 by November. That's actually what my prediction is as well. I think they're going to cut rates 3 times. By the end of the year, we're going to be 1% lower than where we are today, and only time's going to tell on that part of the puzzle. So that is my report for today, guys. So let me tell you guys a little bit about me, you can reach out to me for some help. So let me explain exactly what we are and what we do. So my name is Dan Frio. I'm a mortgage advisor, licensed mortgage advisor at Allied First Bank. It's a bank in Chicago, right outside of Chicago. Working there, that was bad English, working there allows me to be licensed in all 50 states as well as Puerto Rico. So kudos for you guys. I can help you no matter where in the country. There's a little bit more of a uniqueness about us. We're also one of the country's largest mortgage brokerages. Now, what does that mean for you guys? We can take the shopping out of it for you. It's daunting to call every bank every day, try to get a pre-approval, fill out the applications, have them run your credit, and do all this other stuff. Why not just work with us? It's one credit pool, one application. We're going to shop your loan with up to, right now, we have 73 different lenders that we can work with. I just did the count the other day. So what it means is you can apply at my company. We're going to pull your credit one time and we're going to shop you over 70 different companies out there. These are credit unions, banks, mortgage companies. What it allows me to do is I can use their programs and their rates. Their programs and their rates. So why call all over the place trying to figure this out when you can just use us? The cost for our service is the banks that we place you with, they pay us the service fee. So there's no direct cost to you guys. So how do you reach out to us? Well, visit us at therateupdate.com. There's 3 ways to apply. 1, hit the apply now button right up through there. Or if you'd rather call in and talk to somebody, scroll down to the bottom and you're going to see our 800 number as well as my email address. Our 800 number is a little unique, 844-775-LOAN, 844-775-LOAN. And my email address is dan@therateupdate.com. Ooh, I'm awful tired. I hope you buy me a coffee down below. Take care, folks. Hope you have a great weekend. I'll see you here next Monday. Bye-bye.